Welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be talking about position trades. Okay, let's talk about position trades. This is the ultimate goal of every single trader, just be in position trades where the money is just printing from wherever you are in the world. It's just a money tree that grows out of the ground, just constantly printing money all day long. Like, this is as clear as day, the number one solution for any day trader. Just set it and forget it, the slap chop of trades. This is not realistic to just try to get into trades and hold them long term. So, we're going back to this saying that we talked about in the last video. People who say, oh, I'm a position trader or I'm an investor, or a blindfolded baseball player. It's the way I like to look at it. You're just swinging a bat in the dark. And it's okay to say that, yeah, I like to sit in trades long term. And this is a fine dictation to make. And it's fine to say like, oh, I prefer that. But the realism is that you have to look at these trades as, look at how hard it is to turn a scalp trade into a swing trade. And now the same theorem and concept moves forward because only so many scalp trades can turn into position trades. Perfect idea would be this right here, where you have this 15-minute level. It is already a swing trade. You have already entered this 15-minute level from the past back here. You have already held this 15-minute level. And if you are still in this trade, guess what? You're technically in a swing trade because it's outside the criteria of a scalp trade. But now that you're in a swing trade, how do you define the criteria? So we can get rid of this. How do you define the criteria of what should turn this into a position trade? Where can you just sit here and say, well, I'm just going to let it go overnight or some of these other timeframes that you'd want to allude to? Well, the first thing you would do is you'd have trends. You'd have your larger timeframe trends. So in this case, we have a 15 to a 15-minute trend. As always, we start highest timeframe down. We know it can't possibly be the 4-hour because there's just simply not enough time in this trade. So let's start by defining trends. Let's assume that we're in this trade from, like I had mentioned before, from earlier in the day, right? You hit that 15-minute level and you got the perfect trade and you're just sitting in this thing. So you've got your first trend here, which is distribution to distribution on the 1-hour charts, which is all that you have. You move forward in the trade and this becomes your actual trend. Well, the problem is that you've actually broken this trend on the higher time frame. So you actually have to use the 15-minute trend. So when you have a higher time frame trend like this and you've broken both sides of it and you haven't started to move up on the higher time frames yet, you can just go and take the highest time frame available, which in this case, it makes total sense because you don't have that many candles to be creating 1-hour trends. Even 15 is a little, obnoxious, to be honest with you. It's a little obnoxious at this point. You would almost want to be using this trend right here, like 5 minute to 5 minute and saying, oh my God, we're actually breaking the trend because this is the trend that was first developed. And then it would be like this. So actually your first trend that was developed would have been this, and these had held that trend back from the past. At that point, you could say this is my absolute emergency exit on my swing trade because I don't trust it to go any further down. And you could see if it follows this trend moving up. And this would be like having two different trends as you're in a swing trade. One to say, hey, I want to take profits if we break this higher trend. So I'm going to make this one a dotted line. And you can say, I'm just going to be in this until trend breaks and I'm going to just lock up my profits. Of course, if you were defining that as, hey, Cotton, what about the profits missed up top? Well, you had your level here, which was hit to perfection, and that was an hourly level. So if you were really concerned about taking profits, this wouldn't be a position trade. This would just be a swing trade, and you would have no candidation to say, well, I want to see this thing go into a position trade. You would have taken your active profits at the cap that for you, this is a swing trade. So that's out the window. You can't sit there and say, well, yeah, but you left profits on the table. Okay, then accept the fact that you're in a swing trade. If you want to turn this into a position trade, this is the kind of criteria you have to use. You have to develop trends, and one would be, your first trend here would be, it would represent something like this. Take profits. We'll call it take some type of profits. Take some profits. Not the perfect trade because we could have got out on the hourly. We're going to go on the top, and we're going to go to the center of this thing. Let's go to the right side. Right side, left. I guess it's all the same there. This is your take some profits. And let's change the text color to something that's a little bit more readable. How about blue, or what about just white? Take some profits. There we go. Take some profits trade. So this would be the first dictation. If you wanted to just take some profits, that's not legible either, but I think we can move on from the color of the text here. This would be just, hey, I want to lock up profits because my swing trade is failing. If you don't care about locking up your profits, you can take this away. And you can use your active trend, which is still going to be above where your original buy spot was anyways. So if you mark this like that, you can take profits if this starts to hard close this trend before it breaks your level. And you've gotten into a trade where you're saying, yeah, I'm okay risking profits that I have in this trade. Because again, if you were just swing trading, you would have taken your profits from here to here and you have 2%. And if you're like me and you trade 100x at $2,500, that would have been equal to $5,000. So you would have made your $5,000 on that trade and that's it. Alternatively, you have this trend here, which is the 15-minute trend, which is going to be this guy to this guy. Probably going to have around 80% or so profits here. Yeah, you're around 80% profits. If you measure from the bottom properly, you're at exactly 80% profits right there. So if it breaks your trend, you're taking 80%, you're taking a fraction of what you would have if you weren't saying this is a swing trade. So on the one side of it, if you're in a swing trade, you take your profits at target. If you're trying to turn it into a position trade, you have two different types of triggers in the trade. One that grants you some profits because you still want to have kind of like a hybrid system where you're not always taking position trades, but you do like to expose yourself to them. So it's like a hybrid system where you take some profits or where you only ever want to enter position trades and you're just literally a position trader. At least this allows you to understand that you're going to do this 100 times. You're going to take 100 trades and one of those 100 are actually going to go and, because remember, 100 scalps is going to be one position trade. And this is going to happen 100 times where you take a trade and then, in one of these times, it's going to hold this and you're going to move up and you're going to actually turn this into a position trade with larger profits. So when you start working with the numbers and you start saying, hey, only 1 in 100 trades is actually going in my favor, it very quickly puts into perspective how you should be looking at targets, what the realization of how much profits you can make as a scalp trader. I'm not saying scalp trading is the ultimate form, but I think the ultimate form would be taking a lot of scalp trades when you're at the bottoms and tops of ranges. Start thinking about what parts of those scalp trades can turn into swing trades. Take those swing trades, and once you have a bunch of scalps with swings attached that are constantly laddering a move, then you can start to think about, okay, now maybe it's time to turn that into a position trade. And what I mean by that is you scalp this, you take that long, you take this long, you take this long, you take just a bunch of these little tiny trades that have all these profits in them to make a really great income. And you take one swing trade and you take your profits, right? You take your profits. Pretty ideal scenario so far. You've taken a bunch of bunch of scalp trades. You've taken one swing trade. You've made a bunch of profits. And then you just allow this to constantly sit and ladder this move. Maybe it goes down here. You haven't taken another trade yet. It does this. It ladders there, breaks up to here, comes back down again, ladders off of here. This holds. And it's kind of gone through this scenario where, yeah, okay, one swing trade has happened. A short swing trade has happened 2. A third swing trade has happened 3. A fourth swing trade has happened 4. Now, maybe this fifth one is actually breaking this trend. And then you take that as a swing trade and it goes up here. A fifth swing trade has happened and it's actually broken this ladder point. So then you take your profits there. This comes back to some kind of midway point, and then this is where you take your position trade. So you start to try to use all these combining factors after multiple swing trades have happened, after dozens and dozens and dozens of scalps has happened. While this is at the bottom of the range, remember, if we go to larger time frames, we wouldn't do this kind of approach like this. We wouldn't do it in smack dab in the middle of the range because there's just too much movement up and down. It can have to turn into a position. But in a moment like this, where you've got ladder, 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 this refuses to dump. It's stabilizing over multiple 4-hour candles. There's going to be a trade in there that the longer you wait before it moves up, the closer you're getting to that being a position trade, either up or down. So I think that's a really smart way to do it, is to wait until the trades mature a bit, but they sit in accumulation for a little while, or they sit in distribution. Like if it was just kind of constantly sitting up here and just breaking ladders down and just going like this, and like it does it enough times, one of those is going to end up being the position trade. So the longer you wait, the closer you get. So with that realization, take a bunch of trades in this range. There's like 20, 30 trades in here that exist. Take a bunch of them. And then if you miss it, oh, well, there's the next range you can play. Like if you miss the position trade, oh, well, no big deal. Look, we just said we'd be out of this trade because we think it's moving down, and it's moving down. And we protected our account instead of sitting there and saying, oh my God, we have to stay in this trade. It has to be inside of this trade. This is the moment that we have to stay in, when we talked about in the previous video being right here in this trade, and it moved up and we lost the trade and we got out protecting our profits. Now this trend is holding. So you can get rid of this trend here. And we've got 2 trends that are touching and holding in the moment, the next 2 levels that we marked, and it's happening in the moment before your eyes, giving you the next perfect scalp trade to enter, or hopefully anyways, it moves up if you took your trade there. Well, looks like maybe not. Maybe it's going after this deeper level right here. Wait for it. Wait for it. They're going to hit it. Oh, did hit it right here. That counts as a test on the level. So don't expect it to go and test this again a second time. You would still be in an okay position here. You could be exiting now to protect your account if you entered too high, if you're a futures trader, which would be a pretty good strategy, or you could just be hoping this holds. So regardless of what happens here, you've got your kind of perfect bounces. Your first one happened here. Your second one happened there. And this is the way you need to look at position trades. You need to realize there's tons of trades that happen beforehand, and that you're only ever going to get into kind of these positions where you're forfeiting money by always turning something into a position trade. So that's a really good way to look at scalp trades as your starting point, swing trades as a lot of mid-tier points, and then a position trade, which is like the ultimate position if you ask me, just like we said before, just sitting there and letting the money grow. And what you have to start thinking about when you take these trades and to say, okay, a swing can develop into a position and you can't have a swing before you have a scalp. So you have to start at the bottom of the chain to create the criteria that can allow the trade to evolve into the proper trade, the right trade for the right moment, therefore maximizing profits. All right, we'll see you on the next one.